Hey guys, in this video I want to show trading techniques and a scalping strategy to pass an FTMO challenge. So let me first point out the main rules. As an example, I've chosen a 10k account. The challenge lasts 30 days and you have to trade at least at 10 days. The maximum loss per day must not exceed $500, which is 5% of your balance, and the overall maximum loss has to be below 1k. And you won the challenge when your profit is above 1k, which is 10%. It's not easy, but I try to develop a scalping strategy to pass the challenge. Let's have a look. First of all, the strategy is based on market structure. This means we have to know if we are in a trend, take the previous highs and lows into account, and when these levels are broken. This is essential. For it is a scalping strategy, my time frame is 5 minutes. This means in these 30 days, you will have more than enough trading opportunities. We are going to define key levels in the chart and enter a trade when we see price action at these levels. The last point, very important, is proper risk management. We never risk more than 1.5% per trade of the current account size. As I told you, you must not lose more than $500 per day. With this risk of 1.5%, you can, but you don't want to, lose 3 trades in one day, but the challenge is not over. Okay, so let me show you some example trades to explain the strategy. I'm here on EURUSD, the 5 minutes chart. We need some indicators that we use as confirmation, and the first one is the Willy, also known as the Williams R indicator. I will explain how to use it later on, but we go to the settings and set the EMA length to 8. To visualize the highs and the lows in the chart, I use the higher high, lower low strategy indicator like I do most of the time. In the settings, I set the left and right bars to 6, decrease a bit the width of the lines, and disable the labels and the bar color. Okay, now we can easily see the lows and the highs in the chart, and here we have lower lows and lower highs, so this is a downtrend. I traded EURUSD, which can be done pretty good in the London session, so I enabled the session indicator, this one here, and then I just enable London session, which is the green overlay. Okay, in this strategy we want to see a trend. We want to see higher highs and higher lows, or vice versa, not a range. And here we have a downtrend, we have lower lows and lower highs, and then we want to see a break of a low, which happens here. This is a level price rejected to go lower than this, but then it broke below this level, and now we wait for price to come back. So I mark this zone, a zone where we had support, then this level was broken, and now it became resistance. Look at this, we had all these wicks, then it broke, and now first time price doesn't want to go higher than this level. And this is a zone where we want to sell, okay, because price rejects here. But we wait for price action. For example, like here, a bearish engulfing candle, indicating that we are going down now. But now the Willy indicator comes into play as a second confirmation. Look at this. It is really oversold here at this level, but we want to see it overbought when price is touching the zone where we want to sell. For example, like here. At this point, the Williams indicator shows us that we are overbought, price rejected at this level here many times. And then we get a nice price action, a rejection of the zone with the pin bar and the red candle to the downside, and this is where I'm taking the trade. The stop loss I set to the highest wick inside of the area that we defined. And the first take profit that I see is the previous low. The risk to reward ratio is not the best one, but it is above 1:1, so we can take the trade. But here it comes. I stay in the trade as long as the yellow line of the Willy is below the blue line, which is the EMA. So at this point I exit the trade and we have a risk to reward of 1 to 3.2. This means when we are risking 1.5%, this is a win of about 4.8%. I will explain this later on. Now look at the chart. Again, we broke a low. This one here. a level, okay? Price broke this level, and now we wait for price to come back. Now price comes back a bit above the level, which is not the best indication, but after this reversal pattern with the pin bar to the upside, I see price again rejecting the zone. Here we can see price doesn't want to go higher than this level. The willy comes from an overbought area, so what is missing is a price action like a bearish engulfing, and here we have two of them. These red candles that push to the downside, doesn't matter which one you can take this one or this one, are great signals that price is going down even more. So I take the trade here, again stop loss to the highest wick inside of this level. Take profit, well, first we can try the previous low, we can take it, it is above a ratio of 1:1, and again I stay in the trade till the willy is crossing to the upside. And this happens at this candle here. So close the trade with a ratio of 1 to 2.7. Let's have a look at another trade, this time for going long, for buying. And now we have higher highs and higher lows, so we have an uptrend, then a strong break to the upside, and then price comes down again to the previous low. We had two potential zones where price could come back to, this one at the previous high, and of course I watched the price. If I can see a price action at this level, we had some wicks, but the willy still overbought, so I didn't consider taking a trade here. Another zone is here at the previous low. And now look at this, a doji in this zone, then price pushing to the upside, a reversal pattern, and the willy oversold and also crossing above the EMA. So I take the trade, stop loss, lowest wick inside the zone, and the take profit to the previous high, and this is already a 1 to 2.3 risk to reward. Of course you can take your profit anytime, or you wait till the willy is crossing the EMA. No matter how you do it, I'm pretty sure with this trade we already won the challenge. So let's add these trades to the backtester. By the way, this is TraderEdge, the link is in the description below. You can register for free for a 7-day trial. Okay, so let's add here the profits. And now we'll explain how you can calculate it and add it to this app. The risk per trade was always 1.5%. So we multiply the reward with this 1.5% and we get the profit in percent and add this here to this text field. Add profit, and this was the first trade. And we are already up 4.8%. The second trade was a ratio of 1 to 2.7 multiplied by 1.5, and this is the next profit. Now we almost won the challenge, we are up about 9%, we need another $100 to pass it, and the last trade was a reward of 3.5%. Okay, and now we are up 12.8% and passed the challenge. Of course we have to trade now 7 more days, but I'm pretty sure you know how to set your risk in these trades to not turn the win into a loss. So guys, these were 3 random trades. I know this is not a proof, but I will do a full backtest and come back to you with the results. Do me and yourself a favor and subscribe to this channel, hit the notification bell, and if you have any questions, then add these to the comments below. See you soon guys on the trading guide.